Time for your daily dose of automotive news. Grab your coffee, tea, or whatever snack gets you going, and let's dive into what's driving the world today.
Have you noticed how suddenly everyone in America seems to be talking about electric cars? Last month, EV sales didn't just grow, they exploded. Automakers were celebrating record numbers. Families rushed to dealerships. Headlines screamed about the future finally arriving. But here's the catch. Many experts are already warning that what we just saw in August might not be the start of a golden age for EVs, but the final sugar rush before a painful crash. So today, let's break down what really happened, why it matters, and whether this so-called boom is already turning into a bust. Before we dive in, a quick ask. This channel is on the road to 1,000 subscribers, and your support can really make a difference. If you enjoy staying ahead on car news and want to see more deep dives like this, hit that subscribe button. And I'd love to hear your thoughts. Do you think this EV sales boom is the start of something big or just a bubble about to pop? Drop your opinion in the comments, because I'll be reading them. The sudden boom. In August 2025, electric vehicles hit a historic milestone in the United States. According to sales trackers, EVs made up around 12% of all new car sales, more than double their share from just 3 years ago. Tesla stores saw lines of buyers that felt like the early days again. GM dealers couldn't move lyrics fast enough. Even Toyota, which has been cautious about full electrics, saw a rush of interest. Why the spike? Simple. Money. A federal tax credit of up to $7,500 for EV purchases was still available. But that credit is expiring this September. Once word spread, people rushed in to grab the deal before it disappeared. Automakers made the deal even sweeter. Tesla slashed thousands off sticker prices. GM pushed interest-free financing. Toyota bundled in free charging packages. Hyundai advertised buy now, drive electric, save thousands. For one brief moment, EVs looked cheaper, more attractive, and easier to buy than ever before. The deadline trap. But here's the problem with booms created by deadlines. Once the clock runs out, the party usually ends. Think about it. How many families bought an EV in August, not because they needed one right away, but because they didn't want to miss out on $7,500? That's the classic deadline trap. It creates an artificial rush of sales, but it doesn't represent real long-term demand. It's like Black Friday for cars. Sales look incredible for one weekend, but nobody expects that same rush to continue in December, and analysts are already warning about a sharp drop coming in October. Without the credit, the average EV price in America jumps back to over $50,000. Compare that to a gas-powered car, where the average price is closer to $42,000. For a middle-class household, that gap is huge, and when the math stops working, buyers step away. Early signs of the crash. We don't even have to wait for October to see the warning lights flashing. Just last week, GM announced it was cutting output at its EV factory in Tennessee, the one building the Cadillac Lyriq. Their reason? Weak demand. Even during the so-called boom month, dealers are whispering that they already see stock piling up. Tesla, despite discounts, has slower delivery times than expected. Hyundai and Kia are preparing for inventory buildups. When automakers reduce production before the incentive even ends, it shows they're not fooled by the August numbers. They see the cliff ahead. And this isn't the first time it's happened. Back in 2021, when gas prices spiked, EV interest surged. But when prices at the pump fell again, sales cooled just as fast. That cycle, excitement followed by disappointment, is repeating itself. The politics at play. And then there's the political storm hovering over the market. Former President Donald Trump has made it clear. He's no fan of EV subsidies. On the campaign trail, he's already said he plans to slash or even eliminate federal support if he wins. Automakers hear that loud and clear, and it makes them nervous about building long-term EV plans in the US. Meanwhile, China is racing ahead. Companies like BYD are producing millions of EVs a year, backed by heavy government support. Some of their models sell for under $15,000. Imagine that, a fully electric car for less than half the price of an entry-level Tesla. If America cuts back support while China doubles down, the balance of power shifts. Chinese automakers could dominate global EV sales, while US brands get stuck in neutral. The trade war over electric cars is only just beginning. The consumer risks. So what does all this mean for you? Well, here's the tough truth. EVs carry some big risks right now. Used EV prices have been collapsing. A Tesla Model 3 that sold for $45,000 new last year might fetch barely $30,000 today on the used market. Some owners saw their car lose 20 to 30% of its value in 12 months. A buyer this summer might discover that in just 2 or 3 years, their car feels outdated compared to newer, cheaper, longer-range options. And then there's charging. Yes, Tesla's supercharger network is strong, but many parts of the country, especially in the Midwest and rural areas, still have gaps. Ask anyone who's tried a winter road trip in Minnesota or Michigan. Charging stations are fewer, slower, and sometimes out of service. Range anxiety hasn't gone away. Jobs and the American worker. Well, there's another angle people forget: jobs. If sales drop in October, automakers won't just lose revenue. Workers will pay the price. The GM plant in Tennessee already reduced shifts. Union leaders fear layoffs if demand slows further. And it's not just GM. Ford and Stellantis are both nervous about their EV investments. The US government wanted EVs to be a job creator, but if the market collapses after subsidies vanish, the opposite could happen. Thousands of workers could face uncertainty just as America tries to rebuild its manufacturing base. That's a storyline that hits home with a lot of viewers. This isn't just about cars, it's about livelihoods. Who might come out on top? Not every company is doomed. Some are playing a smarter game. Toyota, for example, has doubled down on hybrids. Instead of rushing into full EVs, they've positioned hybrids as a practical bridge. For American families worried about range, it feels safer, and the sales numbers prove it. Toyota hybrids are flying off lots while some EVs collect dust. Tesla is trying to reset the game with the rumored Model 2, a $25,000 EV designed to compete with Chinese imports. If it launches on time, it could put Tesla back on top. But if delays hit, the company risks losing ground fast. Hyundai and Kia, they're in a tougher spot. Recent tariff changes make their imports more expensive. Without subsidies to lean on, their momentum could stall. The winners may not be the ones selling the flashiest cars, but the ones balancing price, policy, and practicality. A global perspective. It helps to zoom out. Europe is still heavily subsidizing EVs, and sales are holding strong. China is producing EVs at record levels, flooding markets abroad, but the US stands at a crossroads. Do we keep supporting EV adoption with credits and infrastructure? Or do we let the market decide, even if that means falling behind? What happens in the next year will decide whether America leads the EV future or watches it from the sidelines. What it means for you. So here we are, EVs just had their biggest month ever. But instead of a smooth road ahead, we may be staring at a cliff. The August boom was real, but built on borrowed time. The tax credit ends, production cuts are already happening, and politics could make things worse. Which leaves one big question. Is this the best or the worst time to buy an EV? Would you rush to grab one now, or wait and see how bad the crash really gets? Drop your thoughts in the comments. Do you trust the EV market right now, or are you sitting this one out? Thanks for watching all the way through. If you enjoyed this breakdown and want to stay ahead of the biggest stories shaking up the auto industry, make sure to hit that subscribe button. It really helps us get closer to our first 1,000 subscribers. That's it for today's video. We'll see you in the next one. And until then, drive safe.